This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. And finally, your monthly charts. And this is why I say the month of December is going to be so important. When you look at it like this, how does that look for a massive cup and handle? 1800, maybe it should be 1820. That was the previous all-time monthly closing high back there in August of 2011. But I just thought, what the heck, we'll draw it here at 1800 just to keep it simple. That cup part that I drew is perfectly symmetrical in that I pulled down and right on that monthly low back in December of 15 is right smack in the middle of this bull. And now what do you have? A handle. What do you know about long-term charts that often have a form of cup and a handle? So I mean, we don't want to violate this handle. We don't want to now plunge to 1700 or something in December. We'd rather bounce. And if we could bounce strongly this month, oh boy, does that chart look interesting going into next year. And I would say, you eyeball this, you can begin to think 2200, 2300 next year. Heck, check silver. Same kind of thing. Now, again, the long-term importance of 26, you've heard me talk about that since July. But really, 22, why did we have 22 as a target this year? Because after finishing last year, again, down there near 18, just to get to 22 would have been quite an accomplishment, seeing as how we hadn't been above 22 since 2013. But we exceeded that. We went all the way to almost 30. But again, on this little chart, cup, handle, target would then be for next year something like 34, 35. But we've got to have a good month in December. So now you know what to watch for. All right, now check this chart out. Here's what you're going to want to watch overnight in COMEX Gold. This is a downtrend line as best as I can draw it from the peak back on, actually it was an early trade on the evening of Sunday, the 8th, before the Pfizer vaccine news. We were up there. I remember the December gold was like 1966. His February contract was up near 1970. And then obviously these are just 2-hour candles. In 6 hours, they hit us for $100. All right, then you go sideways. And then in the move to smash 1860 that occurred a week ago yesterday, you can see where that, so you go to that point, you can see we almost got there today. But I don't think that was the resistance today. Today's resistance was the 200-day moving average, which you can see on the next chart, the daily chart. And look where we are. Again, today, the 200-day moving average for the front month February contract was 18,1880. I have a last. Let's see if I can pull this up because the Globex is now closed. All right, I know we banged around. I said 1819 earlier. That was with a few minutes to go. And now here we are. Globex been closed. 1819.15 is where we finished on the Globex. So just a hair above it. Boy, is that going to be important to watch through the day tomorrow. If we can extend tomorrow, then we no doubt have a date ahead of ourselves with the downtrend line. Goes all the way back to August 15th and 1860 because what had been support becomes resistance. So what tomorrow is going to be very interesting to see what happens. No doubt about it. Not only in gold and silver, but obviously the dollar and all that stuff. Again, we're going to look really close at gold and silver. Let's do those two first. This is the 1-month chart of COMEX Gold, so you know what to watch. All right, now I did something a little different here because we talked about this yesterday. In the plunges last week, the first one on Monday with the flash PMIs used as cover to spike the dollar, remember, up from 92, and then they pounded gold, got it below 1860 and ran the stops. Okay, well, on a 1-minute candle like that, as you come back up, a lot of times you have air pockets where there aren't a whole lot of offers. And as you look further on 24th, see there's a red candle there with the arrow pointing at it? That's almost a air pocket. And as you see the one from last Friday, where they smashes from 1810 to 1780. Okay, so a lot of times you get little air pockets. Well, look what happened. Once we got above 1790 yesterday, over a period of what? 4 or 5 hours, we were back to 1810. Filled that air pocket, if you will, completely erasing Friday's losses. Then look last night. We talked about this in yesterday's podcast. Now, there's just a little bit of a downdraft there, but it was still almost $10 on the 24th. Well, notice once we got above about 1822, we filled that in an hour last night and hit those earlier highs of the day up near 1835. Okay, now look, we can begin, if we keep this trend line going, and we might, given the way the dollar is going. If the dollar keeps selling off overnight, this may happen overnight, early tomorrow. But that original air pocket, that drop from Monday the 23rd, from 1870 something to 1840 something in an hour, okay, that is an air pocket. Now, I don't know if we get all the way back, fill all the way back up to 1870, because I expect pretty stout resistance at 1860. But what I'm saying is, I mean, there's a path here on the chart, given what's going on in the dollar and given the pending news of the PMIs and the BLSBS, there's a path here by the end of the week, to put on another $25 and be up there 1850, 1860. So we'll watch that really, really closely. And you can see this. Silver doesn't have quite the same charts, but again, you can see some of these same air pockets getting filled pretty quick. Now, silver's already broken its downtrend line. We showed you that yesterday. I think the key level to watch here in silver, again, we're 24, 25 or so. Still off the highs of the day, but still moving higher. Key level to watch, especially if gold keeps going, is going to be 25. Now remember that number for a second.
You know, are you going to mess around with trading gold? Or are you actually going to look and think, why am I buying gold? Why, right. What's the point? I've got to understand why I'm doing this. And if you can understand that, then you answer the question. But I really do think that people who just trade it are going to miss the whole point.
Right.
I mean, there was always a point where they will say, well, gold has risen far enough, I'm going to sell it. Okay, so I'm going to sell it. I'm going to wait for it to come back. Now, they don't understand that this is not something you should trade. It is not like an investment. It is not like a stock or anything like that. We're talking about hanging on to real money, which when everything collapses will still retain its purchasing power, but probably will benefit in its purchasing power because people will be very desperate to get it.
Could you say, Alistair, I've not thought of it this way, but with gold up 20% in dollar terms year to date, and that, let's say the most accurate measure is that Chapwood index,
yep.
The real return of your gold year to date is 10%?
Yeah. Well, yes. But I mean, again, what I'm saying is that you can use that as a measure, if you like, to sort of try and work out in this process, how cheap, if you like, measured in dollar terms, gold is. And therefore, some sort of feeling as to where it might go. But doing all that is very easy to miss the point. And that is that we are talking about real money versus fiat currency. If I am right about the inflationary outlook, with the Fed already committed to a hyperinflation course, then there is no answer to this. You do not have any dollars. You just have gold. You might have silver if you believe that silver at the end of the day will have a monetary role. That is a separate question. And so far, I mean, obviously, we've seen silver has performed really pretty well. I mean, it's up 80-odd% from that March bottom. But as I say, the way to look at it is gold is sound money. Don't mess around with gold on the basis that this is an investment and I will take my profits in dollars, because the dollars in which you take your profits will be worthless.
That's right. Friday, December 4th, brought the latest version of what we call the BLSBS, the monthly jobs report. It clearly showed a slowdown in whatever economic bounce back was coming from all of the lockdowns earlier this year, and is probably the start of a trend as lockdowns are once again increasing. This means we will very likely get some form of, call it interim stimulus before the holidays. And then once we get into next year, there'll be a lot more of that to come. The Fed is dying for some debt to monetize, and it's going to take a whole lot of QE and debt monetization in 2021 to keep all the ships afloat. because of that, the dollar has been falling quickly, and it has been a heck of a week for the dollar index. As I speak on Friday morning, it's actually well below 91, and as you can see on the chart, closing below 91 on a weekly basis opens the door for something more like 88 or 89, given the history we've had just this year of quick 3 to 4 week sell-offs. We may very well see those levels before the end of the year. You'll read a lot about that this weekend. Everybody can see this chart and can see those levels coming. What happens next in early 2021 will be the tell. Will the dollar index fall even further? Maybe all the way down to the low 80s. And if that's the case, look back and see what the metals did the last time the dollar was down near that level and falling sharply. I'm referring specifically to 2011. Anyway, that's a topic for another day. But for today, we will watch the dollar index to see where it closes on the week. And then we'll watch gold and silver, which have had a very volatile morning, but are both set up to challenge some very important technical resistance levels next week. Gold at about 1860 and silver at about 25. We'll watch those levels next week, and we hope you come back then for another update from TF Metals Report with our weekly podcast highlights.